This one stock will skyrocket in a few days. The company had 200 million plus revenue just reported for Q3, up 40% year over year. And they've had increased usage of their cancer screening test. So their oncology segment is growing, which is a massive market, sadly. So that's the company, Guardian Health, ticker symbol GH. That's the earnings result. And let's jump into why this company could be a good buy right now. This is not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So this is a little bit about what their test is all about, looking for tumors. And it's pretty good, 95% here. And they're expanding that test as well for different kinds of cancer. So pretty big deal stuff. Not a fun topic to talk about, but definitely really good results. And if we look at the earnings results, revenues are up about 40%. So still reporting a net loss. If we look here at how this company is doing, it's almost a $10 billion company. This is a big vote of confidence. Almost 100% institutional ownership is a big deal for a healthcare diagnostics company. Basically, you get to let really smart biotech investors pick the companies for you, invest in them, and then we get to just see how the earnings come out and how that institutional ownership number stays high. And if it does stay high, it's a good thing. So they do rely heavily on reimbursement, insurance, but that seems like a pretty stable aspect of their business so far. If anything major comes into the news cycle, that could be a good idea to check on your Guardian Health if you do buy the stock. But here's the deal. This is the number, 265 million. Oncology revenue up about 30%. So that's, I think, the big deal change. They also raised guidance, which is always positive for a company that has solid earnings to also raise guidance. And we saw the stock go up significantly. It's kind of gone sideways for a week or so. But if we look at the market, the market it's climbed a little bit, but yesterday was a really tough day. So it gave back everything pretty much yesterday that it had the past week made up. Guardian Health, not such a bad drop, okay? Still holding above this level of about 92.80. And if we look over here, that's definitely the level. It's the high volume. There's all the volume. Close. It's the level. All these buyers were distributed through these days. This is a high volume day here. This is the morning, which we can see here just to reiterate. Well, this is the actually after hours, and then this is the morning climb. So all the volume happened here, which means we want to buy over this level. Important, 93, not over 89. $4 a share difference is a big deal to be able to risk off that 93 level. So that's a little bit about the opportunity there technically. This company, you got to always be a little bit careful buying companies in this biotech, this healthcare medical device sort of bucket. If we look at some other cancer screening similar companies, they're doing well. I'm just saying in general, you have to be careful because you never know if there's going to be some type of crazy FDA result like QURE, or FDA decision, or test result like NTLA with the sick patient. So a big move that's very similar is ILMN, Illumina. Big earnings reaction, holding up pretty well. Not quite as well as Guardian Health, but not a big drop yesterday and strong today. So this one is very similar and a good one to keep an eye on. If they both have strength, that's good for the sector. It's good for Guardian Health. So about a $20 billion company. They also do, sequencing in cancer diagnostics. EXAS, a little smaller, and then a very small company, VCYT. So I'm not sure these results, reactions, stock prices are, quite as interesting, but holding pretty well. So if this can get up above this level, it could definitely be a buy level. A lot of buying here. Of course, pretty significant selling the first day as well. So reaction is solid as far as earnings reactions go. And then this VCYT, Verisight. I'm not intimately familiar with all these companies, but similar to EXAS. So solid reaction, just not quite as top tier as this ILMN and Guardian Health. And just to put this in perspective a little, I mean, I'm being more critical than I should. It's pretty incredible to have 4 solid earnings results in one sector. I mean, that's actually pretty rare, even though some of these sold off a little bit. So there's definitely strength in the cancer diagnostics, the genetic screening theme. So that's how it works. So, companies will buy, funds will buy all 4 of these companies at once. And if we try to look at sort of similar themes, there are some themes that are doing well. I mean, oil is doing well, but if you look at the initial reaction, it went down. I mean, sure, PARR had a solid reaction afterwards, but initially kind of went down. So it's pretty rare. I mean, these are some of the best themes in the market, oil and gas as well as genetic screening, but these oil and gas reactions were just not as clean. So I do think this is pretty much in the top tier of opportunities right now. Guardian Health, I, of course, don't know if it can hold this level, but I do know that's the best level to risk. So definitely a great opportunity despite there being some risk in biotech. This is in testing tools, so it's probably a much higher chance that it's going to stay up there and not have a huge drop like some type of trial company like QURE is for the Huntington's disease cure. So that's the idea. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. That gets posted in the YouTube post section. And if you want help, head over to stockscommunity.com.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.